Hi Robuxio traders, welcome again to our new market update where we will look at the overall volatility again, at the trendiness of the market, and we will look at one nice question from our client which is about volatility and if it is good or not to filter it out, and if we should or shouldn't trade in a low volatile market. Because the question seems firstly very simple, and one would say that filtering out the low volatility period would be nice and would be good for our overall performance. But the truth is that it is not true, because you have to look at the characteristics of the market overall and how the volatility is in fact working. Okay, so let's look at Bitcoin first. You can again see that in the last 14 days, nothing happened at all. Bitcoin went a little bit up, then it went down, and it was again on a very, very low volatility. The truth is that these up-down moves, when market is not trending one way and is going from long regime to short regime, are not good for the overall trading, because the strategies are trying to get in sync with, for example, long trend, but the long trend immediately disappears and the short trend starts. So that way we are getting small losses on one strategy or other, but we are not having enough winning trades that would cover these losses. So very naturally we are getting into smaller drawdown, which is perfectly normal with any type of trading. If you look at ATR, again we are getting to new all-time lows. But what's even more interesting is that if we look at 1 weekly time frame, the ATR is much lower. In fact, we are really under the previous all-time lows by much more than ever before. So the only conclusion is that we just need to wait for the volatility to pick up. But the question now is, should we wait for the volatility to pick up with strategies in the market, or should we filter out these periods when market is just going sideways with little or no volatility at all? Okay, let's go find out. Here you can see our high-risk portfolio from the start of 2023. You can see that this portfolio made like 30% in this year, maybe a little bit more, but most of its performance is from the start of 2023, which is normal because at that time markets were trending, they were in a high volatile period, and there were just enough opportunities to make money. But after this period, crypto markets went basically flat. There are some coins that are trading, but the overall market, and we are trading the overall market, we are not betting on one coin going to the moon overnight or something like that. We are really spreading the risk across the market, and this whole market was just flat. So you can see that basically we had some drawdown, then we made some money, some drawdown again, we made some money, and then we are again in some drawdown, very naturally because we are just waiting to volatility to pick up. But let's look at the high-risk portfolio if we would try to filter out the very low volatility periods, because it is really interesting, guys. Now you can see the high-risk portfolio if we would try to filter out the low volatility periods. You can see that we wouldn't make almost any money at the start of 2023. Why? Because it is the nature of the market. The volatility is picking up very quickly. And if you are using some filter of volatility and you try to not trade in low volatile environment, the problem is that you are not getting into the first stages of the high volatile markets. And in fact, in these kind of stages, you are making much of the money, and then you are just trying to make a little bit more if this high volatile environment won't envelop into like very long bull market, like for example in 2021 or even 2020 or similar. So that's why you can see that this portfolio that would filter out low volatile periods would in fact make 5% or something like that. It would be basically flat because it wouldn't have the opportunity to make money in the start of the high volatile period. So that's just food for thoughts for you. What you should be probably thinking about if this drawdown, for example, on a high risk portfolio, which is around 10-12% these days, if it is too good for you and the volatility of your account is too high, it is pretty good to go with, for example, low risk portfolio or medium risk portfolio that are in drawdown between 6 to 8%, something like that. The drawdown would be like 20-30% lower, and you would be able to better withstand these periods where the market would be flat. Really, just think about it. That's nothing bad about it. One always have to think about the volatility of account overall. Okay, guys, I think that is basically it. If you have any question, just let me know. Write me to pavel@robuxio.com and we can be in touch, and maybe next time we can try another test to show you how the markets are behaving and what we can and cannot expect from them. Okay, guys. See ya. Bye.